Okay, let's get into the stock market technical analysis. I'm going to start off with the broad markets, kind of talk through what's going on today. We have the Fed also coming out tomorrow with some speech. They're doing a Jackson Hole conference thingy, whatever. It doesn't really matter what it is. I just know that Jerome Powell's speaking tomorrow, and the market's, kind of been in a holding pattern, I believe, waiting for that. So we'll kind of talk through that a little bit. If you guys are finding value in the content, please drop me a thumbs up. I do appreciate the you guys engaging with the channel. Leave a comment. Let me know how I'm doing. Let me know if there's charts you're interested in, things like that. I do read through the comments. I get a lot of trolls on the comments. There's just a group of the same people that basically, when the market rallies, they come out and basically make a bunch of smug comments, and then when the market drops, if I get a call right, they're pretty much silent. They never give me credit for anything I get right. They only give me throw shade when when I've got something temporarily wrong, or if I get the right trade wrong. Sometimes I get the trade wrong, obviously. Sometimes I'm just temporarily wrong because my style of trading is not usually going to be profitable from the moment that you enter the trade. Typically, I'm going to call out key levels of resistance. Things can test resistance for a little while, and you can also pop resistance periodically to run stops. And my style of trading isn't usually momentum trading. Is usually the kind of trading where people are instantly gratified, but usually momentum trading, you're late to the party. By the time you notice that there's actually momentum there, you're jumping on the tail end of that momentum. You're instantly right because momentum is in your favor. So you think you're a genius, and then oftentimes, out of the blue, things will reverse or gap down on you, and you'll be in losses unless you know when to get out of the trade. My style of trading typically is to get in a little earlier before the momentum shows up, and then when there's strong momentum in my favor, I sell into that strength typically. Okay, so triple Qs. In the private member group this morning, if you're interested in that, link in the description below. I kind of talked about a sell signal that I was really watching. This is a 15-minute chart on the triple Qs, and basically we had some support. I've talked about this in several posts this week as being a near-term level of support. It's about 478.61, somewhere right in there. And, on this 15-minute chart. And I was looking, I said if we break that, then we should head down to this range down here, right? There's a gap entry. It's about 469. And then there's a gap fill at 463.80. I think we're going to fill the gap, to be honest. But both of those are levels to watch, levels of support. I think we'll probably come down and fill the gap. And then I think we could see a rally off of that. But I've been looking for a move down there, and so far it looks like we're there now, or we're getting there. Now on the triple Qs, we broke right here. We started to break, but the SPY hadn't broke its corresponding level. So if you look at the SPY, its level, it basically closed. Its level is right about here, 557.75. And we kind of held that, and then today, what I was looking for was a definitive break of that level. And it came basically on the 15-minute chart right here on this candle right here. And that basically was where I said, okay, triple Qs is broken. It's broken that support, and SPY now broke the support. So this thing should flush out and continue lower. And I pointed out a sell signal right when that happened to the private member group, and it's profitable as of now. And I do believe we're heading lower. So probably, again, SPY, I could probably adjust this. But SPY, you've got gap entry right there. It's about 549. And then you've got gap fill right here at 540. We'll just call it 545. All right. So, well, that would be my target. I think we're probably going to head down, fill this gap. Usually when you have gaps, you're going to fill some of them. So I think we're going to run down. Probably tomorrow, I guess. Maybe even gap down tomorrow, but ultimately come down, fill this gap. Then I do believe we'll get a rally. Now, I don't think we're taking out the highs, and I'll show you guys why here in a second. The most recent highs, I don't think we're going to take them out. I think we're just going to. I think the continuation move to the downside has started, and so we'll get rallies when we fill the gap. But I think that rally will get sold into. Let me show you guys what I'm seeing here and the reason why I think that might be the case. If you go to the daily chart, you can see here on the daily of triple Qs, again, tech sector being really the most important. And that's why right there. Bearish engulfing candle. All right. That's a topping stick. You see those at the end of extended uptrends. And I do believe, this uptrend we've had since we bounced off the 200-day moving average. Again, anybody that's been following my channel knows that I got long here. I covered my shorts in the pre-market August 5th. If you're in the private member group, you know that for sure because I posted in the private, in the pre-market that I was covering all my shorts and going long and rallied. Then I started to phase in to phase back into short positions. We even caught in the private member group, we even caught this little down day right here. But in general, we started to get back into my shorts and scaling into those shorts. So not just all in short on a day because it felt right, but I started to add to short positions, building a short position. So that's kind of where we're at now, and I'm waiting for those to start to work. Now today, this is a bearish engulfing, wiping out the last 3 days of pretty muted price action with really low volume. So again, that's not market consensus. The selling today is not that heavy either in terms of volume, so can't necessarily say that we're going to just crash here and plunge down. I do think we're going to come fill the gap, but I think we'll probably get a rally there. And then we'll take it from there. But this is a bearish engulfing. That's a topping stick. It's very simple. What you do when you see these bearish engulfings, if we believe this to be the high of this bounce, set a stop right above the high right there, right, on the daily chart. Daily close above that level on triple Qs. It's about 485.30 or so, 485. Daily close above that, not just like a couple 20 cents or so. You do need to see, a couple, 1.5% or so close above that. Then you just stop out. Otherwise, that's the top. And if that's the top, risk reward is you have a really good risk reward ratio, because if this is the end of that move, I do believe it is. I think this bearish engulfing was the all-time highs for a while. We then sold off, caught this short all the way down to the 200, got a reflexive bounce off the 200. We're now seeing the sellers come back in today. And I do believe we're going to take out the 200 and start heading down to some lower levels. I've got a level down here at 413.72. So that would kind of be my next target. Okay, we got to get through the Fed, and again, in the short term, I think we're going to fill this gap and then maybe get a bounce. But in the long term, as a swing trader, this is a bearish engulfing on the daily chart, which tells me that the near-term top is in. And if it's not in, it's very simple. You just stop out above the highs. So because nobody knows if this is the actual top, all we can do is take the probability, take the trade. The chart tells us it's the top, and just trade it as if it is and stop out and lose small if it's not. So that's that on triple Qs. Let's go to the SPY. Same thing, S&P 500 bearish engulfing. All right, we're engulfing the previous 2 days of price action. We got 30 minutes to go. Maybe the buyers step in and negate this as a bearish engulfing. But as of right now, it's a bearish engulfing, and we are likely heading lower. So that's a reversal, a topping stick on the daily chart. What you want to look for is confirmation, so more selling. And that would really fit nicely if we continue to sell down tomorrow and fill this gap. Now, that would be a confirming price action on the daily, which would tell me that that's the top. And on the daily, that tells me we're going lower. Now, that doesn't mean we're going lower after filling this gap. We very likely will rally from there. But on the day, but I don't believe we're going above those highs. All right, I think we rally and then get sold into and continue to work our way lower over the coming days to weeks. So that's that one. And then let's look at these Mag 7s, because these are obviously important. These are the market heavy hitters. This is what moves the market around essentially. Regardless of whether the banks are buying stocks or buying back, things like that. And that very well, providing liquidity, that's fine. But that liquidity only moves the market when the heavy hitters move. So the mathematically, these are tied to the market. And when these move, the market moves. So that's why I watch these, because when the machine moves, that's when the market moves. Amazon, bearish engulfing. All right, let's go to Google. Google, that's a bearish engulfing as well. All right, you engulf the previous day's candle, really the previous 2 days. Actually, the previous 3 days. Sorry. That's a bearish engulfing there on Google. Meta does not really have a bearish engulfing. It just doesn't. So it's, we'll see on that one. A little stronger than the others. Microsoft, bearish engulfing. Apple, bearish engulfing. Okay, Apple engulf as of right now, the previous 5 days. 1, 2, because it's been really muted price action. All right, so that's a bearish engulfing. So we'll look for confirmation of more selling. That's the key. Tesla, bearish engulfing, and Nvidia, bearish engulfing. So we've got bearish engulfing candlesticks on all the major Mag 7 stocks, and the SPY and the triple Qs. And look, XLF, you got the financial stocks. They're up today in general. I mean, not by much, but broadly up. But then when I look at the RSP, the equal weighted S&P 500, it's down. So in general, we're seeing selling, and it's all has to do with the big heavy tech stocks, the $3 trillion companies. They're indexed in everything for the most part, and they're just like they lift the entire market up. They act as an anchor, and they bring the market down. If they move lower, the market cannot hold up. All right, it just can't hold up. There's just the mathematical weighting is too heavy in those Mag 7 stocks. So something to kind of keep an eye on. I don't see anything really in JP Morgan that looks, like a big sell signal. So we'll see. Obviously, we have negative divergence on this one. It's been building for a long time. So I do think this is going to roll over. It hasn't even hit the 200-day moving average, simple moving average at least. So I do believe, if tech stocks do start to roll over, these should follow, and we'll get that tag at the 200. They'll likely step in and try to buy the 200 on that one. Someone asked me about this URI the other day, and it's an okay chart. It's not my favorite, but here's what I got on it. You've got resistance, a little bit of chop through there, but we had several reactions ahead of time, and then we've got reactions there. So I just set a stop right above that level. All right, daily close above 730-ish. All right, not just a couple pennies, but you want to make sure it's like a definitive daily close, and that would be a breakout above resistance, and this is likely going higher, so I just stop out above there. And otherwise, it's at resistance. It's objective to be short. So that's what I see on that one. And here's your negative divergence on the RSI and kind of there on the PPO, but again, it's not my favorite. I'm not in this one, but that's what I have on this chart. Peloton, I'm not interested in this one, but again, it wasn't a short. It's getting a short squeeze today. There was some news, earnings I think came out good, and the trend line right there, you can see here on the daily chart. There it is, resistance, and they basically popped it right to that trend line, and you had bullish divergence right there. See, divergent lows. So not a short that I'd want to be in with bullish divergence. It's just definitely not a short. And then this thing's already been, pretty much taken out back to the woodshed. I mean, it's down from its all-time highs all the way. It's down 98%. So that's not something I look to short. I think you've already made your money short. Time to get out. And there's a short squeeze going on in that one today. Could continue higher. Could be over. Personally, to me, it just looks like a junk stock having a dead cat bounce where it's basically, squeezing some shorts. Could go higher. Not my kind of trade, all right? This is a momentum trade at this point, so just wanted to point it out. And Netflix, I'm looking at a daily chart here, but on Netflix, you can see this is the rally we've been in, just kind of walking up this trend line, and that's broken, all right? Trend's broken now. It's a sell signal. It's not a huge breakdown as of yet, but it is a break of trend. So rallies into resistance should be sold. And this one also was preceded with negative divergence. All right, there's the momentum dropping off on the RSI, kind of flatlining there on the PPO. It's a sell signal. Now, I'm not taking this one personally. I've got plenty of other short trades that I have, like in triple Qs and NVIDIA, things like that. So I don't need to take this one, but this is a breakdown right now. We are breaking trend today. If I look at the daily chart, you can see there it is. All right. So now the day's not over. There's still 20 minutes left. Maybe the buyers step in the last 10 minutes, the algos kick in and save this thing. And so if it's not a definitive break of trend, it's not a sell signal. Okay, that's all I got. I'm going to wrap the video up, get it out, and I'll catch you guys on the next one. Take care.